This is Frontier Opening Bell. Hello, everyone, and welcome to the second trading day of the week. For us here in Nigeria, it's the start of the new week after the independence holiday, Monday, for the 62nd anniversary for the country. So let's get started. So the Nigerian market was closed on Monday. The rest of Africa were opened. The BRVM fell by 1.08%. We saw a deep dive across some of the big names on the Ivorian market yesterday, 203.11. That's what the composite printed in Abidjan. The EGX30, that's in the Cairo market, still below the 10,000 level, 9,685 on Monday, down by a very small amount, 0.02%. The Nairobi stock market fell 0.38%, 127.92. The investors are still trying to wrap themselves around the new administration under President William Ruto, dealing with a rate hike, inflation, and dealing, of course, with the subsidies and what happens to tax payments in the country. A whole lot happening right now with the Central Bank of Kenya talking about FX reserves that is available and how to deal with the 12 critical issues that the new administration is focusing on. The Nairobi Securities Exchange finished off in the red, 0.38. The GSE, which is the biggest exchange on the continent, was better by 0.78% on Monday. The shares of Sasol, Harmony Gold, Anglo American, and a few others went on the upside. 64,227 starting the new month and the final quarter of the year in the green territory, in line with the rest of the developed and emerging markets on what we saw on Monday, that rally that happened in Europe, a bit of it in Asia, and of course on Wall Street. So let's take that straight down and take up the big headline stories as we start today's day. On the East African coast, the Eurozone cutting is spending on the back of inflation and rising interest rates, also cutting back on the imports and spending on Kenyan flour, horticulture, which is one of the main economic stay and foreign exchange earner for East Africa's largest economy, is being bumped by the latest economic issues in UK and the rest of Europe. Kenya has its horticulture sector providing jobs for more than 100,000 individuals and a chunk of its FX as well. That is biting across the Atlantic. And Kenya's treasury is being taxed over the spend of the IMF 41 billion shillings. That is part of what the new administration is dealing with the issue around tax and what has been approved by the cabinet on Monday. Kenya is looking to cut operational costs. That is coming from the new administration, who was a former vice president, now the full-time CEO of Kenya, is also planning to run on reduced budgets. All of that are what the new administration is settling down to. We'll see what happens between now and the end of the year and what the 2023 budget will look like for William Ruto's administration with him in the driver's seat. Not so good news, as it were, in terms of 1.6 billion tons or metric tons of food that's been wasted globally. The UN agency, Food and Agriculture Organization, is warning there could be a shortage of rice globally by the year 2023. We're getting news coming through as well overnight as we go into West Africa that UNCTAD, that UN agency for trade and development, has also issued a warning that central banks around the world need to cut back on interest rate hike to prevent a global recession, in particular for developing countries. That was part of the statement that was attached to the annual report of UNCTAD that was released yesterday. UNCTAD is now forecasting global economic growth for this year to be 2.5% against 2.6% assessment when it made its forecast back in the month of March. The outlook for 2022 global economy by UNCTAD is now in at a lower 2.2%. That came overnight, and the market is taking that on board. What is also on board this morning is the $46.1 trillion that's been wiped off the global stocks and the bond market since November last year, according to an investment note released on Friday by the Bank of America. That was in the news as well. Central banks around the world are now asked to have what you call the coordinated approach to the interest rate hike and be very careful how this will impact on markets and economy moving forward. In Nigeria, tomorrow is going to be a very big day at the NGX. Billionaire businessman and investor Femi Otedola will be listing his Geregu Power PLC, where is the majority shareholder and the chairman, at 100 naira per share. It was a direct listing that will bring additional $573 million in market value of the power generating company to the Nigerian exchange. That's roughly 600 billion in local currency. That will be the first power company listed on the Nigerian market since power privatization of the sector was done back in November of 2013. That is also part of what is on the table under the market watch for tomorrow. We're covering that for you, everyone. Otedola will be closing the markets on Wednesday at the direct listing. And fintechs in Africa are raising money despite the state of the global economy and concerns around the markets. And what you see as a sell down in stocks and bonds, fintechs across the continent are able to raise funding $4 billion year to date in the first 9 months, January to September. A new report is also coming through from the Association of Venture Capitals in Africa and around the world, talking about how African fintechs are still raising funds despite the concerns around the state of the global economy. In the CEMAC region, which is the French-speaking West Africa, FX reserves at its common central bank was at 5.9 billion CFA francs at the end of August 2022. I'm taking that to Southern Africa. ESCOM new board has been put in place, but what is the horizon for this utility company that is troubled? So what's the way out? We're having some economic data today. We're expecting the South Africa's PMI, the factory data, as well as vehicle sales numbers out of the statistics office. The rand early yesterday, moved up 18.01 on the US dollar. As we saw dollar softened a little bit, the rand climbed ahead of those data that we expect to come through, and we'll bring that to you when we have it. China is scaling back on its lending to Africa, and a report from Bloomberg says African countries such as Kenya, Ghana, and others who are talking to the IMF may go back to talking to China. We may go back to the IMF and the World Bank. That's already happening. The IMF staff mission to Ghana is almost concluding their visit, which is the Nana Akufo-Addo's administration looking for $3 billion US dollars. Egypt is talking to the IMF for another $6 billion in facility. Kenya is also doing the same. So the lending that is being scaled down by Beijing may move more African countries to approach the World Bank and the IMF. And power cuts in South Africa may drive South Africa's activity to a 14-month low. When the latest numbers is out today, we'll let you have those details. Zimbabwe is cancelling an exemption facility for importers into the country. So let's get into the North African corridor and see what are some of the stories making the headlines. Economic Freedom Index result is out. Algeria and Tunisia rank among the least free states in the continent, according to that latest report. In the meantime, President El-Sisi of Egypt is asking the central bank governor to come up with more creative initiatives to attract foreign investments into the country, while Egypt will host what it calls a Finance Day on November the 9th during the COP27 summit in Sharm el-Sheikh. And Shell Petroleum says it's opened 400th service station in Morocco and is looking to dominate the market in the North African country, while 7 Moroccan banks among the top 20 financial institutions that are surveyed within the North African corridor. Morocco is home to some of the biggest and most very big banks in North Africa and across Frontier Africa as a whole. And that's about it for today, Tuesday, the 4th of October. I am Bosun Amofai. Have a great day, everyone, and I'll see you next time.